Seven. Good evening, everyone, and welcome to the ANMI and NSE webinar, which is supposed to be the 132nd webinar. And today we have the topic on energy derivative products on NSE. This evening we have a moderator, Mr. K. Suresh. He's got an unwinding profile, but to cut it brief, I'll just speak a few words about him. Mr. K. Suresh has been associated with ANMI from 2011 and took on a responsible post as chairman, TKK, that is Tamil Nadu, Karnataka, and Kerala, in 2013, and has moved on to become the national president of ANMI. Shri K. Suresh is a qualified accountant, an associate member of the Institute of Company Secretariat, and a fellow member of the Insurance Institute of India. He has over 30 years of vast experience in finance, securities markets, accounts, internal audit, and marketing. He also held positions as ex-honorary secretary of Madras Management Association and is now a member of the Management Committee of Madras Management Association and vice president of Hindustan Chamber of Commerce. He makes regular appearance on Sun News TV channels like program on securities and markets, related topics like capital markets, smart investments which yield good profits. Shri K. Suresh represented ANMI at international forum levels like the Korea Financial Association in 2014 and ASF Tokyo Roundtable in 2016 at Tokyo, Japan, organized by Japan Securities Dealers Association, SGSDA. Good evening, Suresh, sir, and welcome to the webinar. I hand over to you, sir.
Yeah, thank you, Mr. Stephen. Really is a great evening for all of us. As a part of improving, rather updating the members' knowledge, ANMI always doing its best. In that series, this is 132 web series whereby, ANMI is presenting today energy derivative products on NSE. I'm really happy to have with me today my Honorable President, Mr. Vijay Mehta, Mr. Abhishek Walawalkar, Mr. Naveen, Mr. Meghana, Ms. Meghana, and Mr. Kunal Shah for the event which is going to happen today. All of you know that this is what's called important from the business development point of view. In fact, SEBI, when it made the unified license concept, it really opened the Pandora, rather it really gave an edge to all members of NSE to hook themselves to commodity platform easily without any much investment, without much loss of time. And NSE also, as a proactive, immediately started designing the products which are necessary for the purpose of members' business. Not only products, in the due course also ensured the depth of the market, because without the depth of the market, it is impossible to ensure proper trading for the benefit of members as well as for the clients also. So in this fashion, rather, NSE has ensured a win-win situation for all of us, thereby development, business development is ensured to the members also. So now today we are going to have a detailed seminar, rather webinar, on energy derivative, which will be very useful to members so that, they can, whatever they missed earlier, they can catch it up. And at the end of the session, definitely there will be a lot of questions or doubts, which will be clarified by today eminent speakers whom we are having. And finally, we will conclude that a lot of takeaways will be there definitely for all of you. With this introduction, it's my privilege to my president, Mr. Vijay Mehta, Dr. Vijay Mehta, who is the president of ANMI. He is a second generation broker, stockbroker, investment banker, corporate advisor. He is the ANMI president for financial year 23-24 and a multi-dimensional personality, considered as an expert on economy, capital markets, and internal affairs. He has been associated with the governing board of ANMI for a long and has been one of its key think tanks. Currently, Dr. Vijay Mehta, the honorary consulate general of the Republic of Romania in India, appointed by the government of Romania. Like that, a lot of credentials are there. In fact, he is heading the company called Mehta, which is distinction of managing more than 200 IPOs, including disinvestment of Delhi and Jaipur stock exchanges. Sri K. Rajaram belongs to the native batch of Indian Administrative Branch, Indian Administrative Service, and has assumed the responsibility of chairperson of International after this. So Mr. Mehta is also the founder and chairman of MEFCOM Securities Limited, members of BSE and NSE, serving clients since 1983. His other company, MEFCOM Capital Markets Limited, is a widely held BSE listed company and extending services in the management of IPOs, corporate valuations, and wealth management. In fact, he is a very positive person, if you ask me frankly, and always encourages the team, ANMI team, to do its best whenever, whatever way wanted. And that way, we are all lucky to have him as a president for the year 23-24. With this introduction, I am leaving the floor to Mr. Vijay Mehta to give his address.
Well, thank you, Suresh, for your kind words. And I think the audience all might be aware that the long name of ANMI is Association of National Exchanges Members of India. ANMI is today the largest representative body of stockbrokers across India. Out of about all the members of different national stock exchanges, we enjoy the membership of about 90% of the total membership. So that way it is a representative body. And over the last 2 years, and especially when I took over president in 23, I decided that with the consent of my board, we are going to now initiate a lot of educational and technical training programs for the staff of the brokers. Because we identified that technology and skill development are two very, very important areas which is required by every broker today. And with the expansion of financial services and brokerage business, more and more people are joining broker offices. So it's very necessary that they are updated about it. In fact, we have formed another institute called ANMI Institute for Skill Development and Technology. So this is primarily for the purpose of imparting education and training programs to everyone. And we have organized a number of paid webinars also in association with NISM. This is a webinar where we are collaborating with National Stock Exchange to explain to you about a new product which is being launched by them. You're all aware that National Stock Exchange is the biggest stock exchange in India and among the top 2 or 3 exchanges in the world. But very few people might be aware that NSE has a large turnover of commodities as well. So today's webinar is one of those commodity products, energy products, which is being introduced today. And I am sure that it will largely benefit all the participants who are attached with us on YouTube, through YouTube. And this kind of educational webinars will not only increase your knowledge, but will also help you to do more business on this kind of derivatives, commodity derivative product on NSE. So like Mr. Suresh Krishnamurthy said, that these kind of things are also increasing the market share of whosoever organizes it. I am sure that till the time my tenure ends, from 132, we will be crossing 140 or 145 webinars. Mr. Suresh is the chairman of our webinar committee, and it is under his leadership and vision that we have come so far in this field. I also welcome the team from NSE who are going to explain to you today, Mr. Mathur and Mr. Abhishek, who will be briefing you about the products. Thank you very much. I don't want to take much of time. This is just a welcome remark, and I would request you to listen to the whole program very attentively and continue to join our NME webinars. Thank you very much.
Thank you, sir, for your valuable introductory speech. Now it is my privilege to introduce our keynote speaker, Mr. Abhishek Walawalkar. He heads the intermediaries, that is membership relationship vertical, both for domestic as well as cross-border members. Joined NSE around 5 months back. Previously used to be part of Citibank for last 17 years. So with this rich experience, definitely we request you, sir, please give your keynote address, please.
No, thank you. At the outset, let me just thank Vijay ji, ANMI President, Suresh ji, eminent speakers, Kunal, Naveen ji, and Meghana from NSE, as well as Raghavendra sir and Steve for putting this together. So thanks a lot for making this happen. As a brief background, as I mentioned, used to be part of Citi, and in this particular role, I manage the member relationships. Over the last 5 months, I have managed to travel the length and the breadth of the country and managed to see most of you. But it's a good opportunity for me to catch up with you online and use this as an opportunity to articulate the commodities piece on this webinar. So as you all know, right, I mean, SEBI granted NSE the approvals to launch the energy futures. This was way back in May 2023, around 9 months back. And then subsequently, if you were to fast forward it, then subsequently in October 2023, we got the approvals to launch the options, which is the both energy, bullion, as well as the metals derivatives on the exchange. It's a nascent phase for us so far. As you all know, the futures, obviously, when the futures was being launched, there did not be much of a trading. Most of the members did not enable or set up themselves, given that most of the trading happens on the options. And there are certain challenges around high margins and certain other challenges for trading in futures. But having said which, when the options or the permission was granted for us in the options, we have seen a very positive interest from various members so far, increased participations and stable volumes over the last month or so. While Meghana will try to cover all the details with regards to the functionalities and the product enrichment, I would just wanted to highlight certain key USPs for trading in NSE. The first and the foremost, if you look at the FPI segment, right, there are 2, 3 key aspects which they are considering, and that's the reason they are showing a lot of interest in trading in NSE commodities. One, NSE facilitates DMA facilities, which is the direct market access. Now, direct market access allows the broker to offer clients benefits the access to the exchange trading through broker infrastructure. So that's a key aspect which may or may not be available across other exchanges. The second piece, when we meet across several FPIs when we travel overseas, is this settlement guarantee fund. So FPIs derive a lot of comfort in terms of the robust SGF fund which NSE has, and yeah, comparatively the size and the scale, and with the endeavor from NSE to size it up further, as you can see in the quarterly provisioning that we are making, that gives them all the more comfort to trade on NSE. So that's the second point. And the third important point is the existing comfort that they already have on trading in the equity derivatives. So all these three put together, the FPIs, including the category 2, have shown tremendous interest in terms of getting themselves enabled and setting them up for trading in commodities. That's one. The second piece is nil transaction charges or any allied charges with regards to trading in commodities. This has been waived off until October 2024. This basically, it's one of the good enabler, I would say, for making an easy entry as well as an exit. The third and the most important thing is the collateral fungibility. So as you all know, right, most of the members who trade on equity derivatives, they have their margin which is lying idle after 3:30. That can definitely be put into good use by allowing to or by trading in the commodity setup. So those are the key aspects. Initially, when this was started, as you know, for commodities, the co-location is not permitted. That's the reason the members certainly took time to set them up when the options piece was launched in October. Having said which, as on date, we have almost all the full-fledged brokers who are able to offer NSE commodities on their platform. And most of the large brokers, right, they are in the final stages of enablement. I'm pretty certain that over the next couple of months, we'll have all the large discount brokers as well who will be able to offer NSE commodities on their app or their platform. Overall, we have around 100 members who are live on NSE, and they are actively trading on a daily basis. This I'm talking about on a daily basis, around 100 members who are trading. With the current depth in the market that we have on the ATM, and Meghana will cover that in detail, what has resulted is we are seeing an uptick in the volumes. If you were to start with the minimal volumes beginning of December, today over the last week, we are seeing closer to like between 15 to 20,000 lots, exchange lots. On the member side, it's always double. On exchange, we consider one. And with a daily turnover of around 1,200 crores. So those are the key details I just wanted to share with the larger group. I would like to again take this opportunity to seek your active participation. And wherever you require your support, feel free to reach out to the relevant RM, Meghana, me. You can drop us an email or reach out to us on phone. We'll share our contacts with all of you. More than happy to facilitate and address each and every single thing which will help you get ready and start trading on NSE commodities. So with that, I'll take a pause, and I would like to again hand over to Mr. Suresh ji, and then probably he can pass on to the relevant or the eminent speakers. Thanks. Sorry, Suresh ji, you're on mute.
Sorry, mute, sir.
Yes, sir. Thank you for your valuable input.
Sorry,
Sir, you've
Suresh ji,
gone
I
on
think
mute again, sir.
mute again.
Yeah, now I got it. Yeah, sorry.
Yeah.
So thank you, sir, for your input. It is my privilege to introduce today main speakers, three speakers we are having for the discussion on derivative products or NSE. Meghana Moderator is an assistant vice president at NSE. She is currently handling commodity relationships at NSE. She has been with NSE since 2005 and was part of NSEIL, SYL, NSEIL earlier. She has experience in handling various functions, including collateral management, clearing and settlement, controls, process excellence, product development, and relationships. It is our privilege also today to have Mr. Naveen Mathur, Director, Commodities and Currencies from Anand Rathi Shares and Stockbrokers Limited. Mr. Mathur is a seasoned professional with extensive experience in commodities and currencies broking, building businesses and teams. With background of 28 years in financial markets and related activities, he has been associated with organizations involved in trading equities, commodities, and currencies. Extensive experience in building businesses from scratch across organizations, leading and nurturing teams while also developing strong processes culminating into leadership positions for organization he has worked for. Presently, he is the Director, Commodities and Currencies, vertical in Anand Rathi Shares and Stockbrokers Limited. He is responsible for expanding business avenues in international landscape and also instrumental in activating the Gift City IFSC project for the group. Prior to joining Mr. Anand Rathi Group, he was head of market advocacy at Multi Commodity Exchange, that is MCX, and was responsible for engagements with various industry stakeholders, regulators, market participants, and government bodies in developing commodities. So he is having very rich experience, and he is the past chairman of Commodity Participation Association, CPA, like ANMI, and member of National Executive Committee of CPA also for the short period, that is period of 2000 to 2016. So like that, a lot of credentials we are having, and really we are privileged to have you, sir, today. Another speaker, Mr. Kunal Shah, is the head of commodities research, and he, along with his team, profession manages commodities verticals of research, institutional and corporate clients, catering them ahead of curve views, customized hedging strategies, and deliveries in commodities. Mr. Shah is prominent speaker and panelist at domestic and international conferences. He has been keynote speaker at Minds and Money, Australia, London, Hong Kong. His views are sought after by television and print media. So this is really a great panel today we are having. So it is better for all the members to be keen on what they are going to present, how they are going to take you to that is through the process of establishing a strong business development with regard to the commodities. With these few words, I am leaving the floor to speakers, sir. Please take forward, sir.
Thank you, sir.
Thank you, Suresh, sir, for the introduction.
Yeah, thank you.
Thank you. So, a very good evening to all the respected speakers, officials from ANMI, and friends from the member fraternity. Just give me a moment before I can share my PPT. Please let me know if my slides are visible to you. So today I'll briefly walk you through the energy derivative products which are available on the NSE platform. As we all are aware, NSE started its commodity journey a few years back, where by now, over a period of time, we have added more products to our product suite. And currently we have products in bullion, base metal, as well as energy space, out of which we'll focus more prominently on the energy contracts which are traded on the NSE platform today, which include the WTI crude oil, natural gas, and wind. So just to give you an overview of the WTI crude oil, as we know that it's unrefined petroleum product, which has uses across transport, petrochemical, glass manufacturing, tires, etc. And a lot of times the prices are, impacted by factors like geopolitical scenarios or the inventory which is declared by the concerned authorities, changing oil supplies and demands. So what is currently available on the NSE platform is the WTI crude oil, which is the light sweet crude oil variant of the crude oil with these specifications. Moving to natural gas, it's a gas variant which has applicability into the industrial, commercial, transportation, as well as the household sectors, as we all know. And again, like similar to the WTI crude oil, which has impacts from the weather conditions or the geopolitical factors. In line with that, even the natural gas is impacted by these external impact factors. So it's quite aligned in that sense. Even the inventories which are declared have an impact on the natural gas prices as well. Moving now to more specifically as to what is available on the energy platform, as an NSE platform for energy basket of commodity derivatives. So we have multiple variants of the WTI crude oil and natural gas contracts. To start with, we have the main WTI crude oil 100 barrel futures. We have a mini variant, which is a smaller contract of 10 barrels, and the options on futures contract, which are again the 100 barrel as far as the lot size is concerned. Now, the quoting that happens is rupees per barrel in each of these contract variants, and the tick size basically for futures is 1 rupee, whereas for options it is 10 paisa. Futures contract are cash settled contracts, whereas the options on futures are based on the underlying WTI crude oil futures contract, and hence at the time of expiry, it gets devolved into a futures contract. The details of how it gets devolved and at what price and all will come into the later slides. As far as the contracts are concerned, we have monthly maturity contracts which are traded on the NSE platform. The options necessarily have a strike price interval of rupees 50. So if it is 6,000 is hypothetically, if it is the current price, then it will be 6,050, 6,100 and so on. On the natural gas side, again, we have three variants of the contracts which are available. Two in futures, which is the main contract is 1,250 MMBTU, which is the unit basically of trading. The mini variant is 250 MMBTU. And there are options on futures, which is again on the main underlying future, which is the 1,250 MMBTU contract. So as far as the quoting is concerned, it is rupees per MMBTU in which it is quoted. The tick size, considering the price of natural gas is a little lower than that of the crude oil, here the quoting, the tick size is 10 paisa for the futures, and for options it is 5 paisa. Again, futures are cash settled, and options on futures are devolved into the futures contracts. Again, here we have monthly expiry. So basically all the energy contracts which are traded on the exchange platform have monthly expiries. And the natural gas options have a strike price interval of 5 rupees. Moving to the launch calendar. So this is just a gist of, what are the next 2004, what are the contracts which are going to be available till June or September as the case is here. You can see futures as well as options contracts. And if you can see, the option contracts typically have a expiry which is 2 days prior to the underlying future contract. And while this is just, some of the contracts which are available in 2004, we have already received approval from SEBI for contracts which can be launched up till December 2025 expiry. Moving to the options on futures. Now, just to conceptually give you a gist of, what options on futures is, because typically if you see in the other segments, we have been seeing contracts which are, exercised, cash settled, or options on goods types. But here the contracts are options on futures. Now, what it means is that the option contract is based on an underlying futures contract, which will have an expiry 2 days prior to the underlying future contract expiry. All the options contract are European style settled, so necessarily it will have to be held till expiry and then it will get exercised. The position limits, as we can say, is there are separate position limits for futures also and options also. And for options, there are typically position limits which are twice as that of the futures position limits which are applicable. So, considering that these contracts, devolve into a future contract on expiring, it may so happen that by the time the option contracts expires, you end up with larger amount of futures than what is permitted to you as per the position limits. So here at least you have 2 days time period to bring that position again back to your position limits of the futures. Now, moving more specifically to how the devolvement of options on futures happens. Now, at the time of expiry, all the in-the-money options contracts are devolved into the futures contract at the strike price. So, if you're typically holding a long call position, that means that you are having a corresponding long futures position, and then that means your long call on expiry will get devolved into a long futures position. So a long futures position will be created for you at the strike price of the option contract that the position was open in. Similarly, the long put position gets converted into a short futures position on expiry, considering that a put is a sell contract. So basically, you will be on the sell side. On the short side, for a short call position in options, it gets converted into a short futures position on devolvement. The short put position gets converted into a long futures position, and all this conversion happens at the strike price on exercise. Now, in case of expiry, in case of ITM options, they automatically get exercised unless there is an instruction which is given, whereby a member is giving an instruction not to exercise that contract. So unless there is an explicit instruction which is given like that, all the in-the-money contract will necessarily get exercised. Out of the money contracts will expire worthless. As far as options on futures is concerned, there is no concept of a CTM here. Sorry. Now, coming to the difference between options on futures and options. Now, as the names suggest, options on goods is the underlying good is the settled at the time of expiry, whereas options on futures means it gets devolved into a futures contract. Now, the price that is considered is, now considering if it is an options on goods, the price will be the spot price of the underlying good. Whereas options on futures, it will be the daily settlement price of the underlying futures contract. Allow me a minute, please. Sorry. Now, in options on goods, there is a concept called close to the money, which means that ATM and certain strikes, 3 strikes above and below the ATM strike is considered as close to the money, which is treated a little differently. But in case of options on futures is concerned, there is no concept of CTM. So as I mentioned in the earlier slide, if you have an in the money position, it will get converted and devolved into a futures contract. And if there is a OTM position, it will expire worthless. Now coming to the performance highlights. Now, as Abhishek also mentioned, that we started off with options contract in October 2023. And in the recent past, if you see, we have seen significant traction where more than 15,000 contracts are being traded on a daily basis. These are the numbers as far as the past week is concerned. Last week of December, you can see consistently there has been trading in 15,000 lots and more. Sorry. On the value terms also, you can see close to 1,200 crores value, which is there and on the notional turnover basis. Now, there are some screenshots that we've provided just to give you a gist of how the liquidity in the strikes are. So if you can see, there are ATM strikes and close to the ATM strikes, which are quite liquid, where the spreads are also good and there is a good depth seen. And with your support, obviously, we are able to achieve a lot of traction there. Now coming to why NSE commodities. As we all know that NSE has been a robust, safe, and resilient exchange which has offered technology platform, a robust technology platform. And we've been in the business for more than 3 decades and trusted exchange and preferred by even the FPIs. It's the number one derivative exchange where settlement is guaranteed by the clearing corporation and also rated as AAA rating by CRISIL in the past several years. Again, there are multiple assets under one roof. So be it equities, be it currency, commodity, everything is available in on one platform. So that also leads to the other benefit, which is collateral fungibility. Since you would have a lot of products, various products traded on one platform, when it comes to managing your collaterals better, that becomes a lot more easier considering you will have your assets in one exchange. Then there will be no transaction charges and other fees and charges which typically the exchange would otherwise levy are all waived off from till October 31st, this year, 24. All FPIs are permitted to trade. So unlike the other exchanges, we have permitted all categories of FPIs which have been permitted by the regulator. And direct market access is also available for the FPIs. So then that comfort of trading directly on the exchange is also available for the FPIs. As far as the codes are concerned, commodity codes are also available on Cogensis and Refinitives. The prices you can be tracked using these codes. And I'm sure with your support, we will be able to see more traction with more contracts getting liquid now. More than 15,000 we have reached, but obviously we'll have more volumes coming in. So that's it from the product side. Mr. Suresh, you can guide it further.
Thank you, madam, for nice presentation on the insights of various energy products, futures as well as options. Now, Mr. Naveen Mathur.
Thank you, Suresh sir. I think I'm audible enough for people to hear me out on this call. So thank you very much, Suresh sir. Heartfelt thanks to NME NSE for inviting me and the organization Anand Rathi on this particular platform to say something about, I would say, commodities perspective and particularly the WTI or the energy products which are recently launched on the NSE. Great presentation, Meghana. So you haven't left anything much to say about the product for me, at least on the energy side. I would say that being part of the commodities for the last 2 decades, I would say that there have been too much of ups and downs. The turns have been pretty steep on the commodity side, and they've been pretty volatile depending upon the factors and the scenarios which we have seen over the last couple of years. Therefore, with the volatility and with the kind of, I would say, the price fluctuations, and being the physical commodities by themselves, people have these commodities to be used either as the final products or they use it as the raw material product. So it means that the volatility definitely impacts margin at certain point of time for people who are using commodities for various purposes. And therefore, with the volatility, you are always less assured in terms of your margins going tomorrow with respect to your balance sheet, your earnings. And therefore, with volatility, I think the exchanges and the platform on the exchanges offer the best solution, the price risk management solution for people to use the exchange platform, regulated platform for managing their price risk exposures on the physical side of the commodities. Having said that, we have seen particularly of the interest of the topic today, which is WTI or the energy segment on the commodities side with NSE. I'm not going pretty far away, but what I would like to share with all of us is that we never thought about that the commodities can be negative too. Means it's a physical asset, and physical assets cannot be at all seen somewhere on the negative part as far as the price is concerned or the price trend is confirmed. But I remember this particular thought that the commodities or the physical assets cannot be on the zero value. I have that got busted in April 2020 when the crude prices itself on the NYMEX touched minus 37 or $38. Minus, I'm putting it minus the negative 37, $38. So you can understand that the kind of times we are living in, the kind of I would say volatility we are living with. It is very natural for us to ensure the exposures on the physical side. And therefore, the best part is that the NSE exchange is there with this energy contracts, both on the crude, the WTI, and the natural gas. And being one of the very biggest of, I would say, the raw material consumers on crude, it is very much, I would say, suggested and advised for the people who use this particular commodity as their raw material, even as the finished product, for some reasons, to hedge the exposures on the exchanges. Having said that, we also work very closely with the retail customers on the commodities, and the retail customers also benefit quite largely with respect to exposures on the commodities. Now, since I said that I've spent about 2 decades in commodities, the only mantra which I keep saying to include commodities as a part of the portfolio, I should not say part of the portfolio. For portfolio, it is only bullion largely, the gold and silver. Crude cannot be part of the portfolio for a retail or for any other customer, I would say. It's non-deliverable contract on the exchanges. It's a cash settle contract. And B, it is not a portfolio. It is not an investment which you are doing. So for per se crude, there have been instances where the crude prices actually, if your logic, if your trend, if you're catching up the trend is right, I would say that you would be able to make money if your trend is right on the commodities. But at the same time, we must remember 2023, the year where everybody talked about inflation, and the inflation comes from commodities. Let me put it this way. So when inflation comes in, the commodity prices move up. The entire economy starts to shrug the growth aspect of the economy, but we try to see that how do we cut down on inflation. And I think we all agree to it, including my colleague Kunal from the research side of Nirmal Bank, that everybody was talking about inflation over the last year or so. That was, I was think, the buzzword of the town across the globe, how the central banks would manage inflation. And let me say, with inflation, what we mean by definition is that the commodity prices are moving upside, and therefore our pockets are squeezing with respect to our purchasing power parity. And at the same time, because the inflation is a monster sometimes, which we see should not be come out of a genie kind of a stuff. We always try to curb it down. We always try that inflation should be within the acceptable ranges for the central banks. And for what they normally do is, and every single bank has done what they have done to curb the inflation is to raise the interest rates. The lending rates are increased. The rates of the central bank lending rates are increased. So therefore, the cost of transactions and the cost of things go up. I would say the rates increase gives a negative vibes to the equity markets. The people who are part of the equity markets, the companies which are listed on the equity market, the balance sheets and everything. So I think therefore there are reasons for the equity markets to behave negatively with the price with the interest rate regime on hawkish side, and because the commodity prices have moved up, the equity markets tend to be taking the side on the inflation, and inflation concerns somehow dampens the sentiments, and therefore the price trends on the equity markets. But what I was trying to bring in this 5 minute talk is that the equity markets are bringing your positions or your investment values, the market values of your investment down. That is because that the commodity prices are moving on the upside, and which has an inverse correlation. So therefore, we always say that that the commodities are inversely correlated to the equity markets, and therefore it's a tool for people to look into as a basket of products, and commodity can be one of the basket of the products to hedge therefore the exposures onto the equity market by virtue of having the inverse correlation to the equity market. So it's a well developed tool. I'll just have one presentation which I keep saying sharing with people. I'll just show it once, which says very critically the and it's a CME study. I think we all can see this particular the dot chart on the screen. Abhishek, Meghana, can we see this chart on the screen?
Yes, Naveen.
Yeah, so thank you very much for that confirmation. So there's a traditional portfolio on the right hand side. Mind you, it is not just the study, it is the study by the Chicago Mercantile Exchange years back, which says that the traditional portfolio, which we always love to be at, is stocks and just the bonds. So say, for example, your stocks are 55, the 45% of your portfolio is in bonds, which is fixed product, fixed income product. The line on the x-axis means the horizontal line जो इस चार्ट में एक straight line है 8.6 से लेके 9.8 तक, that is the risk parameter. The y-axis, which is a vertical line starting from 14% to 15.6%, is the return line. Now, what I'm trying to say in this particular slide or the deck is the returns versus risk, kind of adjusted returns versus risk. For the traditional portfolio, the risk is highest at around 9.6%, and the returns are minimal at around 14%. You go a little left out here, which becomes then 55% stocks becomes 50% stocks, 40% bonds, and 10% managed futures. Managed futures are commodities largely. And if you add 10% of your portfolio and 90% you leave it with stocks and bonds and 10% included in commodities, you would see your risk going down from 9.6 to approximately 9% or even less than 9%. And your returns are improving at around 14.5%, 14.4%. So I would say that if, say, for example, 10 to 15%, the third portfolio says that you have stocks worth 45%, you have bonds for 35%, and you have the managed futures, which are commodities, at 20%. So what I'm trying to say is that you have somewhere around 10 to 15% of the commodity exposure. You have better risk adjusted returns. You have the lesser of the risk, but better of return. So it means in the third folio, if you see you are from 14.5, you have improved your returns to around 14.8, 14.9, and your risk also has drastically gone down to about 8.7%. So what I was trying to just let this particular slide get into on the overall side of the commodities is that the commodity is a great diversifier. It serves a purpose to be part of the portfolio of any of the people apart from just the corporate risk management perspective. As far as the NSE commodities venture is concerned, we are participating it every day. We are part of the NSE crude and the natural gas contracts on the options every day. Our clients are participating every day. It's a fairly liquid contract. They have built up the liquidity. The exchange actually has worked very strongly with the value chain participants. And I think, therefore, the liquidity aspect on the exchange has improved from the day of launch, when it was definitely zero. But today we have seen even the Meghana highest, I think the number of lots traded on the WTI single side was around 25,000 a day, a week before or 10 days before. So I think there is not much to say about this particular contract, with the volatility on crude, the price risk management, the transaction charges, the impact cost of trading on the NSE platform is much cheaper than the other exchange. We don't have the transaction charges, nil transaction charges till October, I think, Abhishek, if I'm right, October this year, 2024. The exchange has waived off the transaction charges on any of the trades which are happening on the commodities at the NSE. Reach and trust, without saying, both Abhishek and Meghna has dwelled upon it. I think the FPI interest would be critical. We are working very closely, Abhishek, with FPIs, and therefore their interest is paramount on Indian markets, including the commodities side, and commodities definitely on the NSE. Would be the thing to look out for in months or days to come. Yes, you rightly said the DMA strategy or the DMA policy being in place would definitely be an added advantage for any FPI, and being rightly so for any category if you are allowing it. Any automated structure like they do it in equity would be beneficial for them, or I would say equity or currencies would be beneficial for them on the commodities too. And since you have that in place, I would say there would be too much of an interest, subject to that we continue to build the liquidity on this particular commodity at the exchange. So with that note, I would say thank you. I've taken, I would say, 5 minutes more than what was allotted to me. But congratulations to the entire NSE team for having a successful launch of this particular contract. And as a member on the exchange, we would continue to put our best endeavor to ensure that that we are part of this particular growth journey. As I say, the partners in progress for commodities with NSE. Thank you very much, Meghna and Abhishek, and thank you, NME, Suresh sir. Hitesh, okay, I'm seeing you too, Stephen, Sidhesh. So thank you very much for being there as with us on the NSE side. Thank you very much, NME, for inviting us, or inviting me on this forum. Thank you.
Thank you, Mr. Naveen. I think Mr. Naveen strongly as well as professionally argued for lifting the commodity market participants. In fact, he rightly said that to explore the inverse correlation between the equity and the commodity, and also he explained with the risk and reward graph very neatly what extent it is.
I just missed, Suresh, one thing. The COVID time was a very recent past, when the equities were on the back burners. Means we had massive losses on the equity side, and the gold, crude, and every single price was on the upside. So means I'm not going far away to 2008, 2009. We have a history just very recent to us. And I missed out that particular point, that the COVID time, if somebody would have gold, silver, or I would say some exposure on the commodities too, the minus 40 on the crude and the plus 40 was $80 per barrel. So it got settled at around $40 post the COVID wave first, after the minus 40 which it touched in April 2020. So that's where I would say the powerful force of the commodities has been, and that's where I've been thick and thin for the last 2 decades. So thank you very much once again, which I missed out the point. I said I must say this too and take another 2 minutes out of it. Thank you.
Thank you, sir. Thank you. In fact, he advocated, besides portfolio, you can think of commodity for hedging also. I think rightly he said that exchange is giving you free of charges, transaction charges till October 2024. So I think participants make use of this, increase the numbers, trade numbers, and increase the volume. Ultimately, it will facilitate a good pricing also for the participants. Above all, FA also, I think Mr. Matthew rightly said, Naveen Mathur said, FA also should participate more frequently and more deeply so that, that also will help the market to grow fast on NSE platform. With this, now I request Mr. Kunal Shah to give his views.
Yeah, so first of all, thank you very much, NSE and ANMI, to provide Nirmal and myself an opportunity to present a base case scenario for oil. So, well, I'm into this market, like Naveen said, almost 2 decades. And my key forte lies with the fundamental aspect of the commodity. So I have a team of professionals who are tracking the commodities, and we do come up with our price forecast, and we do give clients risk management strategies, mutual funds. We act as a commodity strategist on the mutual fund side. We do provide and facilitate mutual funds, the institutional commodity participation. So that's about us. Coming to the main topic of crude oil. So when I started my career and till now, crude oil, when you say a word crude oil, it is one of the most liquid instrument in the entire electronic market. So just to give an idea about if crude oil is trading at right now, say $70.01 as a bid and $70.02 as an ask, the bid ask spread, a 1 cent spread. And you see the number of lots, okay? You see on NYMEX around 15,000 to 16,000 lots or 10,000 to 12,000 lots on odd days on the one tick. So one lot of NYMEX is equal to 10 lots of India crude oil. So just imagine on a single tick, we are having a 1 lakh quantity of bid and ask. That is the amount of liquidity this instrument has. And it's a game changer for economies, for companies, for everyone. So let us say we are right now very bullish on the India story. But what if at this juncture, due to any reason, oil becomes $150? What will happen? Or for the same reason, if oil goes down to $40, what will happen? So not just from the commodity point of view, crude oil remains very important from each and every individual, from all business verticals. The energy, what is happening in the energy market is directly going to have an impact on our lives, on our finances, on our overall the way we are living. So crude oil is one of those commodities where understanding it. So I'll be going into a different part about what is happening with the crude oil universe, because most of the parts have been covered by Meghana, Naveen, and Abhishek. So NSE, yes, we do participate on a NSE platform. Our clients do trade on it. A couple of corporates also deal in NSE crude oil futures. So it is vibrant. It is picking up right now momentum, and we feel that it's just a matter of time, when it gets more traction. So we do provide strategies on the NSE crude oil future contracts. So coming to a market, what is happening with the crude oil market and why it is important, I'll be discussing and taking you through that part. So it seems that, like Naveen said, when some commodity goes to a negative, minus 38, 30, $40 negative, it's a bit of shock. It's a big shock for somebody, who have been studying the economics. The price of commodity can never go below zero, even though it was just for a day. But going below zero and trading on negative on futures was something, the biggest black swan I have seen in my whole life. And hence, I believe this commodity has a tremendous potential for the traders who are dealing with it, and even for the investors to have an insight about what is going to happen in this commodity in future and what are the impact we are going to see. So we are at the cusp of a major change in the policies by developed economies and even developing economies, where more and more countries are adopting a cleaner fuel mandate, which is basically we had a COP2 meeting where all the countries, so like India, have committed that by 2030, 50% of our energy needs will be coming from the renewables. So these are the big themes, We have not seen this way. The entire energy, economic, and political environment of the world is changing. And with every day passing, the importance of oil is not vanishing right now, but most importantly, the demand growth rate is seen abating. So we are what we used to see before COVID and post-COVID right now. We were seeing every year 2.5 million barrels of demand growth. So it's 100 million barrel market, demand and supply. And every year, 2.5 million barrels of demand were getting added. But now things are changing. The demand growth is gradually slowing down, not in a dramatic way, but if the cleaner energy fuels are basically coming into the picture, and more countries are following it. It's not about price anymore. It's about saving the environment. It's about saving our planet. So energy futures are right now the biggest, having the biggest focus of all the investment banks, all the mutual funds, all the money managers in the world. And today the scenario is that every day global producers, oil producers are producing almost 101.5 million barrels of oil, and the demand is somewhere between 100.9 or 101 million barrels. So right now we have a bit of surplus of 5 lakh barrels per day building in the oil market. But this surplus is also coming with an OPEC plus. OPEC plus is a group of nations, OPEC nations plus Russia. So this group of nations have been artificially trying to jack up the prices by cutting the oil production. So Saudi Arabia, Russia remain the key member. They have been cutting production ever since the COVID, and now also they on their meeting they are cutting the production, and they are saying that we will cut more production. But the OPEC cartel, the compliance is not followed by the other members. So instead of dropping due to the geopolitical uncertainties, the production side is getting stronger and stronger. So let us say, for example, Iraq is supposed to produce 3 million barrels as per OPEC plus, but now Iraq is producing 3.2 million barrels. So that way, each and every producers, in order to meet their economic requirement, they are producing more oil than what they were supposed to. US oil production at the time of COVID dropped to almost 10.9 million barrels per day. It is again moved back to 13.15, almost 13.2 million barrels per day. So huge rise in US shale oil production, mainly from the 4 major shale basins. So oil production is moving up. Oil demand from developed part of the world, US, Europe, China, these remain the key consumer, and obviously India. So India demand is not cooling down, but elsewhere, the demand growth rate of oil is gradually dipping. So pre-COVID, it was like growing at a rampant pace. Post-COVID, the demand growth rates have slowed down. A lot of economies, China is slowing down, Europe is slowing down, US about to slow down. So the oil demand growth is gradually going down. So in spite of the fact that we have a geopolitical crisis taking place in Middle East, oil prices are not moving up. This is quite surprising. There is a big threat to the oil supply because of whatever is happening in the Red Sea. And in spite of all these reasons, oil prices are not. So oil prices is one of the biggest indicator of what is going to happen from the economic point of view. So if you are in the markets have remained really great. But the way oil prices are going down right now, it is giving a clear signal that this year, 2024, unless we have any major geopolitical conflict or any major supply disruptions, that is not in our control. But if that doesn't happen, oil prices will remain broadly under pressure and will keep edging down. So this is how, you can take if you are an oil trader, even you can take a view on how the oil marketing companies will do going forward. So if the oil prices, if you are tracking oil prices or you are trading oil prices, you are understanding the demand and supply dynamics of oil. You understand that the companies who consume oil and oil derivatives as their raw material are likely to get benefited. Their bottom line is going to significantly improve. So you are not just going to gain out of the downside of crude oil, but you are going to be benefited in other aspect of your investments or on your trading. So importance of oil derivatives is rising. Each and everyone who are associated with the market, and the purpose of doing this webinar, the first part was the product part, and this second part is importance of dealing in this contract, in this product. So even if you have a smallest exposure in oil contract, okay, you can have a broad base of idea what is going to happen. So if, for example, if oil prices have crashed by 10%, you have a broader idea what is going to happen to all the companies who are using oil or the oil derivatives. Their bottom line is going to significantly increase, and hence the prices of that companies are going to increase. So this kind of correlation also you have to watch out. Participation in oil from the hedging point of view, arbitrage point of view is quite huge. In India is, I would say, still we are at that cusp that the oil demand is not going to fall. In fact, with every year, even though the demand for the production from the renewables is going to be more, but the demand for oil will still remain pretty strong going forward in next 4-5 years, because it's the first time a lot of people are going to buy their four-wheelers, their vehicles. So the demand for the petrol and diesel vehicles will not dramatically go down. So the demand growth from country like India. So if you are having an exposure from the company point of view, this contract, what NSE is offering, can provide you hedging solutions, and also it is going to offer you the trading opportunities. So oil prices broadly doesn't look very attractive going forward, and whatever the upside is very limited this year, and the 2024 it is going to come with a lot of good news for country like India. So with this note, I again thanks NSE and ANMI. Hope to hear more from you guys in other commodity seminar also. Thank you very much. That's it from my side. So you can take it on from me.
Yeah, thank you, Mr. Kunal of Nirmal Bank. I think you have given a broad picture of oil market, and you said that except India, everywhere the price, rather demand will go down. Of course, in India, it may not be that much fall, or demand will be more actually. That's what you gave, and also suggested to use it that as a hedging or for arbitrage and other aspects also is a good product. And I hope the participants would have understood the larger perspective of the oil from your speech, sir. Now I request participants, if any queries are there, you can post it in the chat box. We are ready to redirect that to speakers for any clarification or any guidance. And Mr. Stephen, I think you are also getting some questions, Mr. Stephen. You can also read out from your side also if you have anything. Yes.
So far we have not received any question in on the YouTube also, or the chat box.
That means
also.
Either audience understood perfectly or not understood. There are two possibilities.
They have understood perfectly, sir.
Yeah, perfectly, I think. No, as all the speakers said, it is high time for all of us to think loudly about making use of NSE commodity platform for benefit of our clients as well as for other purposes, so that that will give you a good rather surge in the commodity market volumes. I think that's what ultimately be able to do it. And of course, NSE also doing its efforts to improve the size of the market. So no questions?
No questions so far, sir.
We'll wait 1 more minute so that anybody wants to have anything. Any other thing which the speakers would like to share, sir, in addition to what you have told? Another 2 minutes.
Yeah, just a small thing, before this webinar started, I was just looking at oil prices, and suddenly, the moment the webinar started, just before that, one of the oil fields in Libya got shut, and oil prices shot up by 2%. So this is the kind of volatility, which you get in this commodity. So if you have an access, if you have a good advisors, if you have a good broking house supporting you, this is the instrument, where the trading is actually a trading asset class. So somebody who are traders and post equity, they are looking for some good avenue where the options are very liquid, where the futures are very liquid. This is the commodity to be in.
Yeah, you are right, sir. Mr. Kunal rightly said it's a trader's product. Oil is a trader's product. I think it is people's now choice is to explore that. So with this, Stephen, we can close the session.
Surely, sir. If you can, I would request you to give the word of thanks. Sir. Okay. Yeah. Suresh, sir, I request you to just give the word of thanks.
Yeah, I think it is my pleasure to say a word of thanks to all the speakers, Ms. Meghana, Mr. Naveen, Mr. Abhishek, Mr. Kunal, and my president. All made this session, this webinar very interesting and useful also. Definitely participants, rather viewers, would have had a lot of takeaways from today's webinar. In fact, ANMI is seriously working on every time, every day to bring some webinars for the improvement of, rather updating the knowledge of the members. There's a continuous process. There won't be any end to it. And we always do our best for the benefit of members. I have to thank NSE officials also for participating and others also to make it a grand success. Thank you, sir. I have to thank Mr. Steve also for navigating the procedures.
Thank you so much, Suresh, sir, for being with us this evening.
Excellent.
Yeah.
And in
Thank
case
you,
we
sir.
have any questions
Thanks,
later
everyone.
on, we'll just forward it to you, sir.
Yeah, definitely, sir. We'll do, sir.
Okay.
Thank you.
Thank you. Thank
Once
you.
again,
Thank
this
you,
opportunity
Abhishek.
on behalf of ANMI to thank everyone for being on the webinar today.
Yeah,
Have a
thank
wonderful
you.
Thanks a lot,
Thanks,
Steve.
thanks from NSE as well.
Thank you.
Thanks, everyone.
Yes.